Hello, friends. If you're over 65 and a piece of your Social Security check disappears for taxes every single month, this one is for you and you specifically. I want you to picture 3 people sitting in the same room right now, and I want you to find yourself among them. The first one has taxes coming out of their check that they may not actually owe at all. The second one is having money withheld at a rate they picked years ago, back when they were still working on an income that simply does not exist anymore. And the third one has nothing taken out, feels fine about it, and has no idea that a bill is quietly building toward April. 3 different people, 3 quiet losses. And here's the part almost nobody ever told them. You chose that withholding rate. Not the government, you. And once you chose it, the Social Security Administration kept applying that exact same rate month after month, year after year. And it will keep doing that for the rest of your life until you change it yourself. It does not adjust. It does not check whether it still makes sense. It does not look at your tax return and quietly fix things in your favor. It simply does what you told it to do a long time ago on a form you may not even remember filling out. If that lands a little uncomfortably good because that discomfort is the thing that protects you, this is genuinely easy to misunderstand, and you are not slow for misunderstanding it. The rules really are confusing. So stay with me, because by the end of this, you will know exactly which of those 3 people you are and exactly what to do about it. And for a number of you watching, the correct amount to withhold is going to surprise you, because for some of you, the right answer is going to be nothing at all. 0. I will tell you precisely when that is true. Before I go one step further, a little context so you know what this is and what it is not. This video is made for retirees over 65 who collect Social Security and want to stop quietly overpaying or quietly underpaying without ever realizing it. Everything I share comes from publicly available official information from the Social Security Administration, from the IRS, and from the official Medicare website, and I will name each source as we go so you can check every word for yourself. This is educational content only. It is not personalized financial, tax, or legal advice, and nothing here is a promise that you will receive any specific amount of money. Everyone's situation is different, so before you make any real decision, talk to a licensed professional who knows your circumstances. Now, let's get into what actually matters for you. I am not here to make you feel behind, and I am not going to read you a list of credentials. This subject is confusing because the rules themselves are confusing, and the people who wrote them never sat you down to explain them. If this channel is new to you, subscribe, because every week I take exactly these kinds of rules and translate them into plain English, free, with nothing to sell you. And let me ask you something right now, before we go deeper. Do you even remember choosing a withholding rate? Do you remember picking a number at all? Tell me below, because if your honest answer is no, you are in very good company, and that is the entire reason this matters. Let me start with something many of you have never heard explained. There is a kind of giving that quietly lowers the income number that decides your Social Security tax. According to the IRS, if you are 70 1/2 or older and you already give to charity, you can send a gift straight from a traditional retirement account directly to the charity, and that amount never lands in your income at all. Because it never becomes income, it never enters the calculation that decides how much of your Social Security gets taxed. Now, this one only helps you if you are already giving and only if you are old enough to qualify, so it is not for everyone. But for the right person, it is a quiet, legal way to shrink the very number that controls everything else we are about to discuss. Here's the second thing most people overlook. Medicare premiums can shrink your check too. There is a separate deduction shrinking your check every month that has nothing to do with the tax we have been talking about, and that is your Medicare premium. According to the official Medicare website, your Medicare premium is calculated using your income from 2 years ago. Sit with that for a second. 2 years ago. So if you earned a full working salary, then retired and your income fell off a cliff, Medicare may still be charging you as if you never stopped working, because it is looking at old information. The Social Security Administration offers a form for exactly this situation. It lets you ask for your premium to be recalculated based on your income now after a life-changing event like retirement. Retirement is specifically named as a qualifying event. If your income dropped when you stopped working, this is one to look into. And wait until we reach number 2, because that is the one most people get wrong and it decides everything else. Now to the form at the center of all of this. It is called the W-4V, and it is the voluntary withholding request. That word voluntary is the part people miss. You are not required to have any federal tax taken out of your Social Security benefit at all. According to the IRS, the form gives you 4 choices and only 4: 7%, 10%, 12%, or 22% of your monthly benefit. You pick one. And then here is the whole point: that rate applies to every check from then on, with no automatic adjustment for anything until you submit a change. If you picked 10% back in 2008, you are very likely still withholding 10% today. Think about how much can change about a person's life and income in that many years, and how none of it touched this number. The good news is that you can change it or stop it completely anytime you want, either with a fresh W-4V form or right inside your online Social Security account in just a few minutes. Let me tell you about someone, and I want to be clear that this is an illustrative example, a composite, not a real named person. Picture Margaret, 77 years old, a retired school aide in Ohio. Back when she was 62 and still working, she filled out that form and checked 10% because 10% felt like a sensible, responsible number at the time. Reasonable at the time is not the same thing as correct right now. 15 years later, Margaret's income is a fraction of what it was she qualifies for, deductions she never used to. And there is a real chance that by the actual rules, none of her Social Security should be taxed at all. And yet every single month, the same 10% comes out because that one instruction from a long time ago never stopped running. Her own money goes to the government, earns no interest, and comes back a year later. As a refund, she treats like a windfall when it was hers the whole time. So here is number 2, the one that decides everything, and the one I promised would surprise some of you. Whether any of your Social Security is taxed at all comes down to a single calculation the IRS calls your provisional income. Pause this and write this down, because this is the number that matters more than any other. Add your other income, any tax-exempt interest, and half your annual Social Security benefit. That total is your provisional income, and it decides whether any of your benefit is taxable. According to IRS publication, 915 single filers below $25,000 owe no federal tax on Social Security. None of it. For a married couple filing together, that line is $32,000. Between $25,000 and $34,000 for a single person, up to half of your benefit may be taxable. Above $34,000, up to 85%. For couples, those upper lines are $44,000. And there is more help here than there used to be. Under the new tax law passed in 2025, people 65 and older can claim an additional deduction of $6,000, or $12,000 for a married couple where both spouses are old enough. But, and this is the condition the loud videos skip, that deduction shrinks once your income climbs above $75,000 for a single person, or $150,000 for a couple, and disappears entirely at higher incomes. So it helps the people it is designed to help, and you need to know where you actually stand before assuming it applies to you. Do you see what just happened? Run that provisional income formula honestly with your real numbers, and a great many of you are going to find that your number sits below the threshold. And if it does, then any tax being withheld from your check is a prepayment on a bill you do not owe. That is the surprise. For many of you, watching the correct withholding is zero, and the refund you have been getting every April has just been your own money, handed back to you 12 months late with no interest for the wait. So let me bring the two big pieces together because they stack. The provisional income calculation tells you the truth about what you actually owe. The W-4V is the lever that makes your withholding match that truth. For some of you, that means lowering the rate. For some of you, it means stopping it entirely. Either way, the correction has to come from you, because no agency is going to send you a letter saying you have been overpaying. The Social Security Administration sends your check and applies your old instruction. The Internal Revenue Service receives your return and processes your refund. Neither one calls the other on your behalf. They each stay in their own lane, and the only person standing in the gap able to fix it is you. Let me pull it down to 3 simple steps. First, log into your online Social Security account and actually look at what your current withholding is set to. Many of you have never looked. Second, run that provisional income formula with last year's numbers your other income, plus any tax-exempt interest, plus half your benefit, and compare it to the thresholds I gave you. Third, if the two do not match, file a new W-4V or change it online and talk to a licensed tax professional before you do so you get it right for your situation. Before you click away, send this to one person over 65 who collects Social Security. That could be a parent, a sibling, a neighbor, or someone you see at church. The person who comes to mind right now is very likely sitting on a withholding rate. They set once and forgot, either paying too much or quietly heading toward a bill. One conversation could fix something they did not even know was broken. And if that provisional income formula went by too fast, scroll back and watch that part again, because it is the heart of all of this. Then meet me in the next one, where I show you the Medicare form that can reverse an income surcharge going back as far as a year. I will see you there.